Welcome to the Anatomy of a Trade segment of Trading in Sidebars. Find setups today, make money tomorrow. I'm your instructor, Frank Bunn. We will begin this segment by looking at the inside bar success equation. There are three things we want to look at: pattern definition, technical requirements, and trend determination. We have already defined the pattern as a 3-bar pattern in the trend flow with a higher high plus our inside bar or a lower low plus our inside bar. Our technical requirements form the pattern key. We have no price action divergence. The inside bar itself must be contracted. We have the proper trend flow with expansion at initial momentum followed by our inside bar contraction, whereby we can expect further expansion. We also have no trend divergence. Lastly, we have the trend determination, where we have impulse plus momentum giving us our context. We first determine our impulses and then attach the contextual trend with the micro, intermediate, and long-term contextual trends. We must have the micro trend intact, but with the intermediate and long-term trends, as we will see and have seen, we may have a trend or counter-trend situation. But in any case, we always have momentum. What the success equation gives us is structure. Very specific structure that will enable us to repeat the process of trading in sidebars over and over again, doing the same thing. This structure can be programmable with scanning and algorithms, as we will see later in the training. But the most important thing about the inside bar success equation is that proper structure inherently reduces risk. We are using the pattern key and specific market dynamics to only trade the inside bars which are most likely to result in immediate profit. Let's take a look at how we put everything together with the setup. First, we have the pattern key with this long setup. We do not have price action divergence. Notice how each interval from momentum into the inside bar pattern through point 1, each one of these intervals tests or trades through the 3 exponential moving average. Next, we have the inside bar, which is contracted, as we can see here with the 3/6 MACD indicator. We also have our proper expansion and contraction trend flow. Furthermore, we have no trend divergence. That is, the 3/6 MACD is at its highest high since crossing the zero line. Furthermore, we have a contextual uptrend with all of our MACDs being greater than 0. We also have the proper momentum. All of our MACDs are over the signal lines. This applies to the short, intermediate, and long-term trends, as you can see here. Let's take a look at a short example. Here again we have the pattern key. No price action divergence. Each interval trades through or tests the 3 exponential moving average into the pattern. Our inside bar interval is contracted. We have the proper expansion contraction trend flow at point 1. And we do not have trend divergence, as seen on the 3/6 MACD indicator. In terms of our contextual trend, we have an up counter trend. Our intermediate and long-term trends are over the zero line, but below the signal line, meaning we have current momentum going down, but our trends are up. Notice how the short-term trend, though, is definitively down, trading below the zero and below signal. This must be intact in order to initiate a trade. Here's another example of a long trend which exhibits the pattern key. No price divergence, the inside bar is contracted, we have proper expansion and contraction trend flow into point 1, and we do not have trend divergence. Also, in terms of the intermediate and long-term contextual trend, we have a full-on uptrend here, where our MACDs are above 0 with momentum above the signal lines. This is the ideal context in which you want to locate setups. Let's take a look at another example with another up counter trend moving lower. This is a great way to capture sell-offs in confirmed uptrends. We have the pattern key, no price action divergence, our inside bar interval is contracted, we have the proper expansion contraction trend flow, and no trend divergence. Again here, with our intermediate and long-term contextual trends at the bottom, we have our MACDs above the zero lines, but momentum going down. Notice our confirmed micro trend down. In order to determine our high momentum breakouts, we will be using the counter trend line. The counter trend line for a high momentum breakout should be broken at the entry bar open. This means that the pattern has no resistance. Remember, the pattern on a lower interval is a longer-term consolidation. The trend line must anchor magnetically for accuracy. Here's an example of this momentum at a breakout. Again, take a look at the entire pattern. We have our pattern key and our short, intermediate, and long-term trends in effect. Our counter trend line is broken at the entry bar open. Empirical evidence suggests that a broken counter trend line at open is very likely to produce an immediate breakout over point 1. Here we see a short example with the counter trend line broken at the entry bar open. Take a look at the short, intermediate, and long-term trends here. Momentum is moving downward. Here's another example of a broken counter trend line at the entry bar open in a very confirmed uptrend. Take a look at the short, intermediate, and long-term contextual trends. Notice how the broken trend line resulted in an immediate definitive close over point 1. Let's take a look at the primary impulses we will use to effectively set up our inside bar trades. We have 3 or more consecutive higher highs or lower lows which precede the pattern, or a price action trend of higher highs and lower low reaction points which precede the pattern. We have our 3-6 exponential moving average crossover, and we have unfilled gaps. Unfilled gaps can occur at the point 1 interval or sometime during the impulse. We also have 52-week highs, or for day trading, day highs at point 1, and we also have a special setup system with our 18 exponential moving average breakouts. Here we see 3 consecutive higher highs and higher lows forming the impulse for this trade. Notice that at the interval marked with number 1, we have a higher high and a higher low. At number 2, the next higher high and higher low. At interval marked number 3, we have the third higher high and higher low. Here's an example of a price action downtrend, lower low and lower high reaction points into the pattern. This short example details the 3 and 6 exponential moving average crossover impulse. Notice that the inside bar evolution following point 1 is the first reaction since the 3 has crossed below the 6 in this short example. Here's an example of an unfilled gap which precedes the point 1 bar evolution. In this case, the low of the interval must be higher than the high of the previous interval. This creates the unfilled gap chart phenomenon. Here's another example of an unfilled gap. Follow-through depends on the significance of point 1 similar to other chart patterns. However, equal weight must be given to the impulse. Impulse is the catalyst which results in immediate gain following inside bar breakouts. Also remember the pattern key. When in doubt, trade the inside bar pattern key. With no price action divergence, where the intervals which precede the evolution of the inside bar either test or trade through the 3 exponential moving average. Also, the inside bar interval must be contracted. We also want to see the proper expansion and contraction pattern with our trend flow analysis. And furthermore, we do not want to see trend divergence using the 3-6 MACD indicator as suggested. Specific setup structure comes from the trader, not external sources. Flexibility with trend determination will enable you to capture both trend and counter-trend moves in high probability setups due to short-term momentum. Here's what you do next. You select your impulse or impulses in trend context. You focus on the inside bar setups with the proper structure according to the pattern key. Sample your trades in groups of 10 to 20 transactions. Master the low-risk entry, and you master the setup. Once you master the setup, you have mastered yourself. Consistency is right around the corner. This concludes the anatomy of an inside bar trade segment of Trading in Sidebars. Find setups today, make money tomorrow. I'm your instructor, Frank Bunn.